Welcome back to Phil's SMSF podcast. I'm your host. My name's Phil. Now, today's episode will deal with the section on preparing and completing your SMSF annual return, otherwise known as the tax return. Now, the ATO tells us that every year a SMSF must prepare and lodge a tax return. Now, how this return gets lodged or where this return gets lodged from, the tax office does not prescribe at all. In fact, you can do the return and lodge it by yourself on paper. There is a sample, there is a paper return on the internet on the ATO's website that you can use to fill in all the details of your SMSF and send it in by paper, by mail. I know a few clients do that, a few trustees do that. However, when lodging your tax return every year, if you have appointed a tax agent to be your agent, you have basically until around the middle of May the following year. So if we're looking at the year ended 30th of June 2020, you have until around about the 15th or 17th of May 2021, provided that your previous SMSF lodgements are all up to date and there's nothing outstanding in terms of your SMSF in relation to lodgements to the ATO. If there are outstanding lodgements to the ATO, then your SMSF return will be due and payable by the 31st of October, just like every other tax return who does not have a tax agent. Now, you can download the tax return form from the ATO website, but it's not as straightforward as you may think it is. There are a lot of things that you need to consider, and there's a lot of extra things that you need to take care of and to include in your super fund, things which you may not necessarily have to include in an individual or a company tax return. Now, speaking of lodgement dates, even if you lodge early in July, you still do have until end of October, or if you're with a tax agent, you still have until around the middle of May in order to pay your taxation obligation. Now, if your SMSF is in its first year, you need to mention to the tax office in the return that this is the first year that you're lodging a SMSF annual return, because then the supervisory levy will be $259 multiplied by 2. So that's $518 that will be charged in your first year, and then every other ongoing year it'll be $259. Now, the SMSF annual return is composed of different sections. And these sections help you to go in order and to fill in the details of your return. So I will attempt to put up a link, a PDF link of the SMSF return in the episode, but there's no guarantee that it is going to be there's no guarantee that it's going to be successful, but I will definitely attempt. Now, Section A is the fund information. So that's where you put in all the information of your fund, from a tax file number, ABN, the name of your fund, the postal address, and some information about the tax return status of your fund. Now, in that Section A, you need to appoint an auditor. Now, regardless of how you're lodging your tax return, the tax return has to have the name of an auditor, has to have the auditor's registered SMSF number and the address details, the same as what's in the independent audit report, where we, along with the financial report. And the tax office needs to see that just in order to do its due diligence checks. And then in terms of the SMSF auditor section, you need to state whether the Part A and Part B of the audit report was qualified. So remember, in the previous episode, we discussed about the audit report. Now, a audit report that's unqualified, that's a good thing in terms of an audit. In an audit definition, unqualified report is what you're looking for and is a good thing. A qualified report is not a very good thing in terms of a audit opinion because, simply for audit purposes, and a definition, a qualified report, it perhaps presents a negative opinion of the auditor. And if Part B of the qualified report, so going back, Part B of the qualified report basically deals with the compliance matters of the SMSF. So if Part B compliance aspect of the SMSF was qualified, was the issues in the report rectified? You have the chance to tick yes if it was rectified prior to lodging your tax return. And that's why it's very important that prior to lodging your SMSF annual return, you have an audit report and the audit report is clear. So it's very important to get an audit done before lodging your return. And also Part A consists of whether the fund has commenced or is being wound up during the year, and the type of the fund needs to be disclosed. And obviously whether the deed allows government's co-contributions to be accepted and so on. Where the fund was wound up during the year, you need to specify whether all tax lodgement and payment obligations have been met. Now, in Section A as well, there's information about exempt current pension income. So if your fund is in pension mode, you need to state whether there is some pension income, and maybe not all of the income is exempt pension. You need to look at the member's accumulation account and the pension account, just like what we discussed previously, and then the proportion of the pension account as a total percentage of the fund's total balance. So that proportion that percentage is going to be the exempt pension income amount. Section B is the income section. So again, the very first part of the income section deals with any capital gains events. So if you have had a capital gains event during the year, you must tick yes. Otherwise, you need to tick no. And then you need to tick whether exemption rollovers have been applied or not. Again, please see your accountant or your tax agent if any of these things apply to you. If you have a capital gains exemption, or if you have a rollover benefit or anything like that, you need to clarify that with your accountant. And then any net capital gain is included in that section there. And then obviously the other income section is interest income, dividend income, and the other important thing is accessible contributions. So accessible contributions, remember, they're contributions that come from your employer, and any personal concessional super contributions, any contributions where you're an employee that you have added on top of your employer contributions up to $25,000 is assessed in your SMSF. So you need to split between the employer contributions and your personal contributions. And then you have the dividend income, where you include the franked amount of the dividend, and then you also need to include the franking credit, which is an additional assessable income. And then you need to include the gross trust distribution. So if you've received a tax statement from any managed funds or any trusts, you need to include the gross amount of the distribution. And in the income section, there's a non-arm's length income. So if the auditor has determined that some of the income you've received is a non-arm's length income because of maybe for the purpose you've wanted to take advantage of higher returns in your SMSF than usual, or because there's no supporting evidence at all, then non-arm's length income is taxed at 45% in your SMSF, and that needs to be included in the income section. And then any exempt current pension income needs to be included. So if your exempt current pension income is anywhere up to less than 100%, you need to put in that amount there, which will then lower your income. And then that means your total assessable income will include all of the income minus your exempt current pension income. Section C is your deductions and your non-deductible expenses. Now, where there's exempt current pension income, the deductions in your return are going to be apportioned. So not all of the amounts are going to be allowable deductions. Some are going to be non-deductible expenses, just to represent the portion of the exempt current pension income. So let's say if your exempt current pension income is 70%, then I would say only 30% of all of the deductions are allowable deductions, and then the rest is non-deductible expenses because you need to take into account the exempt pension income portion. And then, so the deductions in your SMSF return includes any interest expenses, capital works deductions, depreciation or decline in value, insurance premiums for members, auditor's fee, and investment expenses, say, for example, any bank charges, any advisor fees, and then management and administration expenses, and then other amounts. And then if you had prior year tax losses, you can use those tax losses to offset against any of your assessable income. And then when you come to your total deductions, you then work out your taxable income or loss. Now, if there's a taxable loss in your SMSF, you need to include underneath the box where it says loss, you need to put the letter L to indicate that the amount is indeed a loss. Now, Section D is composed of the income tax calculation statement. So you start with the taxable income and then the tax on the taxable income, and then you work your way down. So are there any franking credits that you've received, whether it's refundable or non-refundable franking credits? You need to include those in all of your other offsets and any other offsets that you may have had in your SMSF. And then you work out the total tax offsets. Then you have the PAYG installments raised. Now, that may not necessarily mean that it's all been paid. It's just installments that have been raised. So July to September 2019, October to December 2019, January to March 2020, and April to June 2020. You need to include the total of these tax installments. And then you also need to add the supervisory levy. So if this is an existing super fund, the supervisory levy is $259. And then there's a supervisory levy adjustment for new funds, which you need to include another $259. And then that's the total amount due or refundable is inclusive of the supervisory levy and also the PAYG installments. Section E is a little section where it has losses section. So you're dealing with tax losses and capital losses. So you are allowed, obviously, tax losses. Now, tax losses can result from, obviously tax depreciation on buildings or capital works deductions, or any maybe where you have not had any income, but you've had expenses and you've had deductions in your SMSF. So their tax losses carried forward to later years, and then capital losses carried forward to later income years are also included as separate items. Section F is a member's information. That's a very important thing because this member's information comes from the member statement in your financial report, where you have the details of the member themselves. So member A, tax file number of the member, date of birth of the member, and then you have the opening account balance, and then you have any contributions received, personal contributions, rollovers, CGT retirement exemption contributions, spouse contributions, and other contributions. And then you have allocated earnings or losses. That comes from the SMSF taxable income. And then you have also, if your member has has two different accounts, so an accumulation and a pension account, you need to specify the portion of the accumulation phase account balance. So that's in section S1 in your members section. So you'll be able to see that from the PDF of the SMSF return. And then any retirement phase account balance, or otherwise known as pension balances. And you also need a number of pension balances there. You need to include that. Then you need to include, obviously, any pension payments that you've received or that the SMSF has paid to its member. And you need to work out the relevant code of the pension payment. So that it's not a very straightforward thing if you're doing it by yourself, and if you don't really know what needs to be done. That's why we do recommend you engage a professional accountant and tax agent to do all of your financial report and your tax return for you. And then at the end of the page in the members section, you have the accumulation phase value, and then you have a retirement phase value. So that's very important to have it tie in with all of your members' balance and with the financial report that states a members' balance. Now, section G is the supplementary members section. Now, that section you would include any member who has left the fund during the financial year in which the tax return is being lodged. And so section G includes anyone who was a member at any time during the 2020 financial year, but is not a member at 30th of June 2020. So this includes deceased members or any former members who left the SMSF by rolling out all of their benefits to another superannuation fund, or any member who has had their benefits paid out by the SMSF, let's say by way of a pension payment. Now, the interesting factor is if the SMSF has more than 4 members on 30th of June, it has breached the superannuation law. So you can only have up to 4 members. And in section G, you need to include the members who you cannot include in section F due to the lack of space as well. So again, please do not have more than 4 members in your SMSF, because that will breach the superannuation laws. Now, going to section H. Section H includes your fund's total assets and liabilities. Now, the total assets of the fund is broken into listed trusts, unlisted trusts, cash and term deposits, any investments in loans, listed shares and unlisted shares. Now, the interesting thing about section H is there's a little section on the left-hand side where it deals with any assets that are subjected to limited recourse borrowing arrangements. So that may include residential property or non-residential property, or overseas real property, or Australian shares or overseas shares. And if you do have properties that are subject to limited recourse borrowing arrangements, you need to fill in a property count. So a property count, it's just the number of properties that are subject to limited recourse borrowing arrangements. So you can have 2 or 3 properties that are subjected to separated limited recourse borrowing arrangements. You will have the value of that property listed there. And the property count in this instance will be 3. So the tax office knows that there's 3 properties in the SMSF that's subjected to 3 different limited recourse borrowing arrangements. Now, in the previous podcast episodes, we've recommended that if you have 3 different properties, well, we don't recommend, it's a must. You must have 3 separate custodian trusts or bear trust deeds with separate bear trustee companies that allow these borrowings. Now, if you do not have any limited recourse borrowing arrangements, you then simply just include the value of the residential or non-residential property outside of the section of the limited recourse borrowing arrangements. Now, there's also a cryptocurrency section where you need to. Now, cryptocurrency is different than shares. If you do have a cryptocurrency trading account, you need to generate a end of year financial report where your provider needs to outline the market value of all of the cryptocurrency that you have, and then you include that in the cryptocurrency section. And then after adding up all of your assets, you then include the total number of your assets. Now, also in the assets section, there's in-house assets. So remember when we spoke about in-house assets in the previous podcast episodes, you need to specify whether there was an in-house asset and the value of that. Now, it's okay if the value of that in-house asset is less than 5% of the fund's total assets. Now we go into the liabilities section. So in the liabilities section, if you have a limited recourse borrowing arrangement, you need to include in the left section any borrowings. So any amounts of loans outstanding that are related to limited recourse borrowing arrangements, and then transfer that number into the borrowing section there. And obviously the liabilities section includes all the total member closing balances from sections F and G in your tax return. And then you have your total liabilities. And that total liabilities and the total assets need to tie in and reconcile with the financial report section, the statement of financial position, or otherwise known as a balance sheet. Section I is the taxation of financial arrangements, basically dealing with financial arrangement provisions apply to the SMSF. Please see your accountant or tax agent for help on this section if you're unsure. Section J consists of other information, say, for example, if the SMSF has made or is making a family trust election or an interposed election. Again, if you're unsure, please see your accountant and or tax agent for help on these sort of things. Now, in most cases, sections I and J may not apply to a SMSF. Section K is the declaration section, where basically you as a trustee needs to sign the declaration that all of the information and everything disclosed in the tax return is true and correct, and that you're given a tax office or authority to collect this information and to basically check this information. So the trustee's information, you need to sign off as a trustee, and you need to provide your own details there as a trustee. And then at the bottom of section K is your tax agent's details. So please bear in mind your tax agent needs to be different than your auditor. They need to be different people and independent people. Now, if you're doing this return on your own on paper, you don't need any tax agent section. You can leave it blank. But if you are engaging a accountant or a tax agent to lodge your SMSF return, then your tax agent will need to fill in the details and fill in their names and all of the tax agent's practice and the tax agent number and all of these sort of things. So this is basically what you need to do and how you need to fill in your tax return every year. It's a bit of a lengthy process. Now, if you have multiple assets and a lot of assets in your SMSF, it's a good thing. But with that, you need to take a lot of time, especially if you are doing this return by yourself and lodging it by yourself. It is time consuming, especially if you don't have any electronic software to do any of these things for you. However, if you are engaging an accountant or a tax agent to do this for you, then chances are It'll be done a lot quicker. Yes, you may need to pay some accounting fees and tax agents fees, but it is a deductible expense at the end of the day. So it's entirely up to you in what you want to do with your SMSF tax return, but they're the steps required in lodging it by yourself. Now, the next episode, which is a final episode, will deal with how to wind up your SMSF. And then after that, I'm free to take any questions and answers and then have them all in a episode after the episode of winding up your SMSF. But the last formal episode will be about winding up your SMSF, so stay tuned for that.